Time to do it again. Stan Weinstein, man, Secret Wars, 30 episodes in, 31. And it's just getting down. There's so many candidates. The more you dig, the more you spot them out. And I'm revisiting a whole bunch of charts that I usually do with my classical monthly candled trading framework. And my background kind of knows those charts that have been consolidating for a while. And 1 or 2 year consolidation on a monthly chart. Put that on the 5-year weekly candles, and wow, you have nice stage 1s or 3s, nice consolidation patterns. And silver is one of them. SLV, that is the iShares Silver Trust on ARCA. I have my volume, my 30-week moving average. What else do I need? My RSI, that's for my A+ setups. And I have the Ichimoku cloud for my A++ setup. I'm doing one better than Stan. I'm going to use this cloud as it helps identify a trend line. If the price action is below the red cloud, downtrend. If the price action is above green cloud, uptrend. Else, this is just it's potential resistance on the way up and potential resistance support on the way down. So if you have a breakout, let's do examples, and that is the purpose of the podcast, is to train yourself, practice, make sure you know that framework by heart. And let's just see what happened here. So right here you had a base. Right there. And right here you had a candle with a lot of volume. This one right here. Let me get my arrow. You had the volume picking up. And you were above 30-week moving average. But was that the ultimate candle to break out? Look, you're right under the upper threshold, upper boundary of the Ichimoku cloud, of the resistance. Ideally, you need to wait until you got that second candle right there, and it has even more volume. What's that RSI looking at? Halfway point going upwards. And that would be the breakout right there. And you see contracting volume on the pullback. That's the way you want it. And probably after that, there was a bounce off. A couple of things. This is the ADX. I kept forgetting about it, and I don't use it for buying signals, but I'm putting it here as a backdrop because if I'm trying to build a scanner for to identify these good stages for Stan Weinstein, I think that's pretty much going to be an easy way, right? Maybe get a stock which has an ADX under 20 for X period of time, for 6 months, 1 month. Then I know that it's the trend has slowed down. So what does that mean? Trend slows down, sideways action, stage 1 or stage 3. So just by checking the ADX for under 20 for a certain period of time, and that could give me some good screeners. And after that, maybe just look for the once it starts growing out of. See, it crossed over right before it broke out, so not bad. Good timing for that. The trend changed, and Stan always says that you already have a good breakouts. The stock has already moved 50% up. So that's going to be even good. And that beginning of that trend represented through the ADX. I'm using it as backdrop. So every time I'm doing a Secret Wars now and scanning, I'm going to have that and just make sure to see if it's always giving me a good identification, if it coincides properly with how I identified previously visually Stan's breakout patterns. All right, there you go. This one right here. So silver did that. Pull back light volume, continue increasing volume, going up. Do I have a trend line? Let's check it out here. 1, 2, 3. All right, so now we have a valid trend line. The pullbacks usually happen within 1 to 3 months. 1, 2, 3, 4 candles 1 month. And there we go, bang. So right after here, you would have triggered out half your position. And let me check if we would have moved our sell stop along the way. Here. I like to look at the RSI for the V just to give me an identification of pullbacks and move ups. Price action went down, went up to previous highs, and there you had your sell stop. Investors would have moved it up here. Initial entry would have been here at the top of this candle, and investor sell stop would have been below the pattern here, and trader sell stop would have been below this pattern here, below 30-week moving average, and below round number if possible. So if it's 14, then you would have put it 13.95. And what's the rule again, or the way I interpret it, is investors have the same, they behave like traders for exits once you're close towards the end. And for me, a trendline violation is the end of that stage 2 upwards move, aggressive move. Doesn't mean it's not going to continue stage 2, but you have a good chance of the price action going back to 30-week moving average and playing out around that. And I like being aggressive on my exits, but a trend lines, it gives you, that means you spent the least time in the stock for the maximum move. After that, you don't want to spend in the stock that much longer for that not much more move. Just get out and wait until imagine. Like if you have difficulty imagining, this is a trick I do. And you could always center, you see? Same black space, same black space, same black space. Somebody puts it here. Oh man, could only go down, right? It's like your brain's playing tricks on you, and somebody places the action here. Oh, it could only go up. Look at that base, but that's just optics. Put it here, move the margin, and then let your imagination roam free, man. And it's important because the price action could go anywhere here, anywhere. I don't care what silver did in the past. I don't care what it's doing now, or news related to it, or what it can or cannot do. This is what you have to evaluate right here. So right now you've been out, would have had a, here's the profit, up to this line, half position taken on the breakdown of that trend line, and half of the position on the sell stop here. For the traders, but investors, since you were trend line violation, you would have sold it right here at the same place. So that's not bad. You often end in the positive for a stand, maybe 7 or 8 times out of 10. You would have moved your sell stop enough that you would have been safe. So even if you don't have a 2 to 1, 1 to 3, 1 to 8 risk to reward ratio, doesn't matter. You keep ending positive. It's like, no, I'm not going to take your penny. I want $1. Well, if I'm giving you a penny 100 times and the dollar I'm giving it to you 1 time out of 100, either one, it's good, right? So don't spit on either case. But if you have a high percentage of reaching, being in the green, in the profit zone, then you don't have to do Hail Marys all the time. All right, let's move it up. And you see, trend line violation, sideways move, back under 30-week moving average. And right here, I would have put an alert. It's hard trying a trend line straight. Need a better mouse. Okay, here's my Just put an alert here at 1968 about, or just a little lower. And right here I seem to have support. So what's happening here for silver? Look at that. The Ichimoku cloud, the resistance getting really thin, and price action moving, zigzagging in a tight pattern, and then flipping over to green support, very thin. And that's what happens. That's the beauty of a nice stage 3 or stage 1. The Ichimoku cloud, you're going to see it. It's just going to get thinner and thinner, and just sometimes red, sometimes green, depending where the price action has been. That means whenever you explode now, either direction, there's no big cloud here. If you wanted a breakout, you had this overhead, this resistance right here. So and see the price action kept going down. It would have been very hard to go through that, or riskier of having a severe correction and getting caught into sideways action and just get obliterated, losing patience, emotional landmines, listening to news every day. Where's it silver going? And then just selling at the wrong moment, not respecting the trading framework. And here we go. And look at that. What happened here after the move? ADX went up, trending, and now back under 20. Doesn't mean you have to sell. We're not basing our entries or selling on ADX, but like I said, I like using it for eventually for a scanner. And the longer I'm in under 20, the more I'm in a stage 1 or 3 consolidation. Check it out. And I could just look at the ADX, man. Just stare at the ADX moving. You don't even have to look on top. You just know that you're in a stage 1 or stage 3, because I don't know now. Went down stage 4, and then stage 4, stage 1, stage 2, stage 3. You could call it stage 3, but stage 3 could continue into stage 2, or it could become stage 4. And here I am at the end of the day. I could even put in some more alerts right there. See, as time moved on, these higher support and previous support and resistance, as represented by the Ichimoku cloud, have vanished. Those periods, they're not like giving you any support or resistance anymore. Are they still valid? I had a discussion with Red Baron on stageanalysis.net. I think there's still consideration for that support and resistance. There's a math equation to figure it out. Maybe that's the Ichimoku cloud's calculation. But I've had patterns, 3 years, consolidation, sideways patterns on monthly candle charts, and that resistance is really there, and it's real. But the stand system, he doesn't want any close by, nearby support or resistance for breakouts or breakdowns. And what could happen usually is 30 when goes up, you're in, and when you hit previous support or resistance, if it's really still resistance, then you'll just have a correction, right? And that's okay. You just don't want that correction to be on high volume. If it's on high volume, that means that's really crazy resistance you ran into. Not a good sign. You might not be able to go through it immediately or as fast as you can. So that's about it for how I see previous support resistance. The important is that triple confirmation on breakouts, like we just had here. High volume, twice the previous 4 weeks average. RSI going from halfway point or under halfway point upwards. And you want to break out above the 30-week moving average, above horizontal resistance line, and for the A++ setup, above the Ichimoku cloud. So that's all you want. After that, if you there's previous resistance like here, maybe did this slow down this stage 2 because previous resistance there? Maybe, but it doesn't matter because the price action is going up. You have your trend lines for exit signals to capture profits. You have the pullbacks and move backs up to move up your sell stop if it would have continued even more. And you have that ultimate 30-week moving average violation to exit. So everything's in place for you for the framework to make it viable. Don't overthink it, and just keep practicing it. So this could blow up anytime. SLV, RSI, the ADX really turning down. This is really, look, that's why you put alerts. I can't check this one every day, but the day, I might even put closer alerts. Just to get back, they're free, the alerts. And if I get triggered, I just come back, see how the chart morphed. And I just want to see, I just want to get alerted there if the price action could move. So I have all these levels. I think the most important one right now is, look at that. There's like the Ichimoku cloud is so tight. So tight. A definite breakdown below, where's my lowest one? I put 1450. Below 1450, I could probably declare that a stage 4. If we break out above, which one is that? 1665 or 17, maybe 17 is a round number. So a breakup, I'd look out for 17, close above 17 for a stage 2. So 17 stage 2 and 1450 for a stage 4. All right. Man, this is going to explode, man. This is a crazy base. I don't know what's going to happen, but it's going to do something. Maybe. All right. Bye.